Hi and welcome to the Market Alert for Monday, the 14th of June 2021. So inflation is starting to get crazy, and it is worse than you think, is one of the main headlines from Friday. Stockman warns buckle up. May's soaring CPI print was no transitory blip. The Fed's destructive money pumping has many victims, but chief among these is the Wall Street financial narrative. Yes, keep inflation low as you can until you change your mind to try and hyperinflate out of the debt situation. Bank of America, everyone knows that the Fed will stop tapering as soon as the S&P drops 10%. This is what they did in 2018, covered this last week. That's precisely what they do. As soon as the stock market starts to unravel, as the Fed is no longer got its put underneath it to support it, then they will soon step back in. That's what they've done before. Gold, hedge you win, tails you don't lose. Talking of gold and precious metals, they're under pressure and will be until the 28th of this month, until the Basel III regulations come into play. So expect a bit more volatility in this market sector. This is about the dollar. It's permanent, not temporary. Dollar purchasing power plunged at fastest pace since 1982. As you scroll through this, you will see how the purchasing power of the dollar has actually fallen considerably. It's a good article, actually. It talks about inflation as well, and also CPI, used vehicles, etc. So worth a look. If you do a search for this headline and then put in zero hedge, it will take you to it. So that's what you want to be looking for. I'll just highlight that for you there. And what else have we got? Ranchers sell off cattle, farmers idle thousands of acres as America's drought emergency escalates. This is a true national emergency, and it is really starting to affect our food supply. Well, not only is that inflationary, but that's going to cause all sorts of social problems as well. So something else that's going on that's not being reported by the mainstream. Probably for the obvious reason, to stop people from stockpiling, but again, something else that's going on in the background to add to the inflationary prices on a supply basis there, or demand and supply basis. Implied volatility dropped from 12.98 to 12.46, which is quite odd given that the underlying market actually fell during Friday for the Dow and the German DAX. News today, we've got Bank of England, Bailey speaking at 2 p.m. The rest of the week, again, we've got Bailey speaking. And then really, I think the main event this week is the FOMC, which is on Wednesday. And also this, it's the quarterly one. So June, we have a press conference to follow. So keep an eye on that one. So the market may hesitate waiting to see what Powell has to say on Wednesday. I should imagine he's not going to taper, but you never know, because now if it's $500 billion overnight on the reverse repo market, there's so much liquidity around in the banking system, they don't know what to do with it. So maybe the tapering is going to come as a result of that. The 120 billion a month will need to be stopped, and then that, of course, will add some volatility to the markets, just as it did in 2018. So let's have a look at the Dow. We'll start off overnight. You can see the market finding support at the 20-bar moving average. Not a lot of movement overnight. Very quiet, all things considered. But on Friday, the market trading down to the 38% retracement there, from this low to this high. So at the moment, the market finding support, but not looking that fantastic, to be honest with you, compared to the DAX, which put in a new all-time high on Friday, if I recall. I'll remind myself in a minute when we have a look at the chart. But the Dow on Friday, reversing Thursday, as you can see there, just straight down, bit of a break. We've got a retracement there of 89% of the 20-bar moving average, and then all the way down. So the market moving 100, 200, 250 points before it found some support, and then attempted to recover, and overnight prices sideways to higher. Like I say, very quiet. Maybe because the FOMC meeting minutes this week. In the German DAX, if I can find it in the daily chart, yeah, you can see that we've may have a new all-time high overnight here, where the market's gapped up. So let's just have a look at this. Let's just drag this out so we can read it. Yeah, 3 points higher for the DAX on the overnight, but again looking weakish at the moment, as if a down day could be installed for the DAX, unless of course the Dow rallies, which will give the impetus for the market to move to the upside there. Friday on the 5-minute chart, you can see that we moved lower. We then found support down here. We've got the buying coming into the markets, where the market's tested and then starts to move to the upside, and then it's just a matter of retracements. And then each time the market closes back above the 5-bar moving average, you'll see this all the way along. The market continues to move, and then we had some real momentum up until we had this climatic volume here stopping the market, and then prices trading sideways for a bit and then moving higher again. Again, you'll see that sort of climatic action at the top here, and then that's during the afternoon session there, the afternoon kicking off, and the market moving higher. We'll look at that in the 2 minutes just to have a bit more clearer picture of what happened on the intraday in the morning. So prices moving lower, finding support, and then just trading sideways. Now, it didn't start to move strongly until again mid-morning. There seems to be a pattern now. It's like, let everybody trade first thing, don't move the market, and then they move the market mid-morning. And in the afternoon, you can see the market was just sideways as the Dow moved lower. And interestingly enough, the DAX held very well, considering the Dow dropped 250 points there. So finally, in the metals markets, we'll start off with the dollar. This is rolling over to the September contract, up for Friday very strongly there, and then just starting to reverse overnight. In the silver market, bouncing back a bit. It was down lower this morning, but again you can see that the market is stuck in that sideways range. I'm just going to add in a few lines here so that we can see where we are. I've had to recreate all of the charts this morning. I just need to add a few more lines in so you can see that we've got the market trading, still finding support at the 2750, which is that blue line there. So the psychological line holding at the moment, and you can see through there you've got sort of the mean of where the market's actually trading. So again, we still need to take out these 3 highs that we have. The last one from Friday, as the market attempted to stay above 28.50. $28. This line here, 28.50. The next one up needs to be taken out as well. But you can see that we're sideways at the moment. And again, until Basel 3 is sorted on the 28th of June, then prices are likely to remain sideways. Even the gold market here is subject at the moment to some downside pressure, and they'll do everything they can to actually get this market down going into the Basel 3 over the next couple of weeks, so don't be surprised. But Friday, the market down, and notice that prices at the moment from here to Friday's high will be trading around 78.89, bang on 89 there at the moment for gold. So a crucial level for the gold market at that 89% there. Must hold is the key there. Certainly coming off a bit off those lows during the overnight session there. So I think that's it. That's where we're currently at. Like I say, it's fairly quiet. Not a lot of news today, and I think that's going to affect the markets. But certainly very, very quiet. If we just go back to the DAX 2 minute, again you can see overnight really quiet, barely moving at all on some 2 minute bars. So really quiet there at the moment. The market's obviously towards that high, as we noted earlier. I'll just compress everything up so you can have a look, see where we are. So we're quite away from the DP. It's the high really that's going to be interesting if we can get above this to continue to make new all-time highs. The low, certainly a long distance off there, 150 points to where the market's currently trading. Okay, with that I will conclude, and as ever, thanks for watching. See you in the next one.